Hey everybody, this is Tom Hart from Benton Oakfield, and today we're going to discuss all the expenses regarding healthcare and how to choose a plan. When picking a health insurance plan, there are going to be several cost factors that you should be considerate of. There's a lot going on, so let's dive into it. So here are the 5 key terms that I want you to pay attention to. First, we have the premium. Then the copay. The big one, the deductible, which everybody's always nervous about, but it is a very big factor. But there's also something else that people don't ask me a lot about. Then there's coinsurance, and the second biggie is the maximum out-of-pocket. Because these are the 5 key terms, let's dive into each one. So we have the premium. That's going to be pretty straightforward. Everybody's aware of it. What it is, it's the amount you pay on a monthly basis for the insurance company to insure you. Then we have the copay. Pretty much everybody's aware of this one too. It's what you pay when you go see a doctor or a specialist. Keep in mind, many plans do have preventative care visits, so you could get 1 or 2 doctor visits a year without even having to pay a copay. But verify that in the plan. Then we go on to the big one as mentioned, which was the deductible. So what the deductible is, it's an amount of money that you will have to pay before the insurance company starts paying a certain percentage towards your medical bills. I do get asked a lot about deductibles, rightly so, because you're pretty much flipping the bill until you hit your deductible. The next term is coinsurance. This is a portion of what you're going to pay once your deductible is met. Now, you don't have to pay this portion forever because it leads us into our next term. The final term, what I don't get asked a lot about, but it is just as significant as the deductible, is the maximum out-of-pocket. After your deductible is met, you're going to pay in the coinsurance zone where you'll be paying 20, 30, 40, 50%, whatever the plan designates. And you're going to pay that up until you hit your maximum out of pocket. Once you hit your maximum out of pocket, the insurance company is going to pay 100% of your medical bills. Now that you know all the variables, let's see how they work together and what you should weigh out while choosing a plan. It's basically going to be a balancing act between the premium and the other terms. The lower the premium goes, the other terms are going to go up. If you want a lower deductible or a lower max out of pocket or even a lower coinsurance, your premium is going to go up. So the main thing that you got to do is speak with a broker that is familiar with all the plans and that could kind of ask you questions to find out what would be the best for you. And then they're going to pick a plan that's in that sweet spot where you're not overinsured, you're not underinsured, because if you're over or underinsured, it's actually going to cost you more money in the long run either way. Now, let's recap in an overly simplified way the entire process. You pay your monthly premium, and then you go pay your copay each time you see a doctor. Your doctor orders a couple of tests or procedures, and you end up paying your deductible amount. Now the coinsurance kicks in, and you only pay a certain percentage of the following medical bills. You keep paying those percentages until you hit your maximum out of pocket. Now the insurance company pays 100% of all your medical bills. Now we have a general idea of everything. Let's go on to how do you calculate all these expenses. Here we have Judy. Let's say Judy has a $1,200 deductible, a $50 copay. That doesn't apply to the deductible. Be aware that that is a thing. It happens. It's actually in most plans where the copay does not apply to the deductible. And 20% coinsurance. Now Judy goes to the doctor for a normal checkup. This is considered her preventative care visit, and she doesn't have to pay anything. Then the doctor says, Judy, I think you're absolutely nuts, and you should see a neurologist because psychotherapy will not help you. You're too crazy. That's obviously a joke. So then Judy goes on and she meets a neurologist or visits a neurologist. And she will have to pay her copay, which is $50. The neurologist then orders an MRI, which costs Judy $1,000. Now Judy will get a medical bill for $1,050 for the copay and the cost of the MRI. Since Judy has a $1,200 deductible, a $50 copay that doesn't apply to the deductible, and 20% coinsurance, the $1,000 will apply to her deductible, leaving her with $200 left on her deductible. Then let's say she has a $5,000 maximum out of pocket. The entire $1,050 will apply to her max out-of-pocket costs, leaving her with $3,950 remaining. This has been pretty straightforward so far, so let's keep going. A month later, Judy has a procedure and the total cost of that procedure was $4,000. She will have to pay the remaining deductible of $200, leaving the balance of the procedure at $3,800. Because her coinsurance is 20%, Judith will have to pay $760 of the $3,800. Her medical cost for the procedure will be $50 for the copay. Don't forget that. There's that initial visit. $200 for the deductible, and $760 for the coinsurance, totaling $1,010 for a $4,000 procedure. So you can see when it's being used, it actually does work out. You are getting a deal, so insurance is worth it. Once that is all paid off, Judith is wondering, where do I stand with my insurance costs? No biggie, Judith. Let's get a pen and paper or whip out the spreadsheet and let's get cranking on this. Her deductible has been fully paid for. In regards to her $5,000 maximum out of pocket, she has paid $1,050 towards the MRI visit and $1,010 towards her procedure. This leaves her with $2,904 left in her out-of-pocket costs before she hits her maximum. Once she hits another $2,940 in coinsurance, she will then reach her maximum out-of-pocket and the insurance company will pay the 100%. So that's pretty much health insurance in a nutshell. There are costs all over the place, but when you see this and it's broken down in a simplified version, it gives you a much better understanding. As mentioned, this was a simplified version, so it is always best to speak to a broker, or if you have any questions, you can visit us at www.bentonoakfield.com or give us a call at 212-365-4553. I would also like to dedicate this video to one of the most impressive legends in the entire employee benefits industry, my father, Robert Hart.